Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly and welcome everybody once again for another amazing video of DIY investing. Had you have just made a couple small investments during the low point of these cycles, you would have made multi-millions of dollars had you have actually been able to hold. Today we're going to be breaking down what this pattern means, why Bitcoin is following this exact same pattern once again, and what it means for the long-term projection and the price discovery of Bitcoin moving forward from here. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to hit that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure if you're a new guy just getting into these markets, go ahead and download my free ebook and Beginner's Guide to Crypto. This is going to teach you guys a lot of the basics to help you be more profitable and make better decisions. That's why it's free to download. Links are in the description. And with that being said, let's jump right into this amazing video today. For today's video, we're going to be covering this chart pattern, which is known as an expanded flat correction based off of Elliott wave theory. There has been multiple different markets and major indices inside of our stock market that has created this exact same pattern before major bull runs actually ensued. And so I found that it was really interesting that many of our biggest indices have created this exact same pattern before one of the most vertical price expansions we've ever seen. And to see Bitcoin literally creating the same thing gives me a lot of confidence that the bear market is very close to being in. Now, what we have here, guys, inside of an expanded flat correction is pretty much this universal pattern where we have the top of our resistance right here, and then we have the support down here. And this is where we're pretty much just consolidating inside of this pattern. Now, the way it kind of works, after our Elliott wave impulse, we get an ABC down, ABC down, ABC back up, and this ABC back up actually makes a new all-time high. We can see that after we find support, we end up clearing the range highs at our resistance, only to see that become too great, and then we actually fall back below it. Now, this is one of those chart patterns that is ultimately designed to chop everybody out, because had you have panic sold here, and then you watch the market break out to a new all-time high, most people were ending up buying back in over here right before this major top ensued. And so on the same way back down, the people that bought the top, they're watching as this thing crashes, and then when it sells through support, everybody's looking to panic sell through there. And so it's literally a capitulation type of pattern. It's meant to shake out all of the weak hands, both on the bulls and on the bears in both directions. And so this is one of those patterns that not only is playing out inside of Bitcoin, but it's actually played out in many of our major indices. And it gives me a lot of confidence that what we're going to see from Bitcoin is ultimately us bottoming inside of this sea leg. Now, the next one we can look at is actually going to be the S&P 500. The S&P 500 did this exact same pattern, and it maybe even did it a little bit more consistent than the Bitcoin cycle. And with this one, we didn't really make a big leap into clearing the range highs, but we did make a nice move down clearing the range lows. It's still the same type of pattern, it's just that the range highs didn't get cleared quite as much. But we can still see this exact same thing, and the big thing I want you guys to remember here is what happened after this pattern. What takes place after an expanded flat? Well, if we're looking at this entire price history, the S&P 500 was uptrending for basically 100 years. And from that point, when we really started to make our first major parabolic rally, I would say, because let's go all the way back here. These were pretty parabolic, don't get me wrong, but this is consistent, right? Every single impulse has a pullback, and it's really consistent all the way through. We didn't start getting really vertical until, I would pretty much say, about 1994, and that was really the internet bubble. And that's when we see this type of price action, right? This, it's very parabolic nonetheless, but it's not vertical price action, right? This is still us just kind of grinding off of moving averages and trend lines. This is where we distance ourselves from all moving averages. And so what I find is interesting that we're creating this pattern after a big leap into a parabolic rally. And it's really that first parabolic rally, we get our first major correction, the expanded flat comes in here, and then we get our next major impulse. And this is why I wanted to talk to you guys about this pattern, because what happens after this impulse is usually a very parabolic type of rally. And this is a type of pattern that will play out inside of a continuation for a bull cycle. And we can see that that was the case for the S&P 500. This was really our lead up phase. This was really our first sell-off. And it was this first sell-off that we get the expanded flat, and that's waiting before we get this big parabolic rally, right? This is getting, extended. We're starting to see the market get really overbought. And this is what we would consider a very parabolic type of rally, right? And so when we're looking at other charts, we can take a look at the NASDAQ, for example, and we can see that this one created the same pattern, but it was at just a different period of time, right? The S&P 500 has all of this price history to go off of. And it was really a consistent growth throughout the last 100 years until the internet bubble, and then we started to get pretty parabolic in our cycles. Now, when we look at the NASDAQ, it created the same pattern, but it was happening at a different point. This was happening at its first impulse, rather than the S&P 500. This was kind of in its first major sell-off. So when we're looking at this, we still see the same universal chart patterns, and that's what I want you guys to remember here. This is a pattern that has played out a number of different times in plenty of other market cycles that we can actually look at. And so when we're looking at Bitcoin, I see a lot of people getting really sketched out about the fact that we've had this break below 30K support. And that's why I wanted to give you guys this video, is just to summarize the fact that this is something that will play out and has played out a number of times. And every time it's played out in any of our major markets, look at what has been the bull side reaction. And so when we're looking at all of these, let's go over here and take a look at one final one. This one is the Dow Jones, and it's going to look a little bit more closely related to the S&P. But with the Dow Jones, we ended up clearing the range highs much, much better. This was a little bit more volatile than even the Bitcoin pair to some extent. But we can see that this is still kind of the same sort of chart pattern that we've seen play out in a number of different ways across many of our major indices inside of the market. And each and every time it's played out, it's created such a big expanse onto the upside. And so when we're looking at this, to me, I think Bitcoin looks the most related to pretty much the NASDAQ. I think that Bitcoin will most likely create a similar pattern that would be, something like we saw over here. And the real thing I'm trying to pinpoint is just the length of consolidation. Because where we're at for Bitcoin, we're at the point where we're about to complete the bear market, right? The bear markets last a year in duration, historically, give or take a couple weeks. But bear markets last almost exactly 1 year. We're not quite at that threshold, but we're getting very, very close. And once we hit November, we will be at that threshold. Now, after the bear market, we have to build a foundation. There has to be a foundation of support before we can start breaking out. Now, if we look at the S&P 500, support was found after capitulation, and we literally just started breaking out. And with the NASDAQ, it was a little different. With the NASDAQ, we built a foundation. We took a period of consolidation to get to that point. And so when I see this chart, to me, even though it's not going to sync up perfectly with the Bitcoin pair, in my opinion, this is going to be very similar in a lot of different ways. And where we're at today is pretty much the same as this period here. And honestly, when I compare the two, I'm not expecting that Bitcoin's just instantly going to V-bottom and supermoon like the S&P. I would expect it would build a foundation, even if it's not, like our normal bear markets, This one was only 3 months and then we broke out, but this was like a year and a half, 2 years, where we just started an uptrend, and that was kind of the case even all the way back in our first cycle over here. Even though we can't see it, we consolidated here for 280 days, and then it was just a slow build up. It was about 2.5 years from the cycle top before we actually started breaking out. What I'm looking at personally is this. And this is kind of just how it seems to me. I think that we're going to end up creating a little bit more of kind of a foundation here. Like this. And then when we do manage to get a higher high, I'm not expecting anything too crazy. Probably a run up to 30 to 40,000 like I stated. That would be our first higher high. But I'm really not expecting a whole lot of volatility. This is the type of price action that I'm expecting to come from Bitcoin. And so, 2023, by the end of this year, we should actually bottom, and it should be following something like this. And then by the beginning of 2023, we should actually start our first higher highs and the beginning of our next bull trend. Which, historically, if we're looking at what could potentially follow after this, we're looking at a pretty decent size of move. And so this is kind of why I'm trying to share with you guys these examples of these many, many, many prior market cycles that have created kind of these same sort of patterns. Because, even though the PA is going to differ, it's not going to look 100% the same. These are the type of things that we expect from Bitcoin cycles. Yes, it's going to look different than this, but nonetheless, every single one of our cycles dating all the way back has behaved very similar to what we're seeing today. It's not that different. And so when we're looking at all of the prior cycles and major indices that have created roughly the same sort of chart pattern, it gives me a lot of confidence that what's coming is another major move into another cycle. I have a lot of confidence in that. I don't think that we're done by any means, just mainly because when we're looking at things from face value, we haven't ever seen the true mainstream adoption like we would expect to see. I think that we're getting closer than ever before, but we're still not there. I think now than ever before we have the on-ramps that we can truly onboard all of the retail investors to get a true cycle that would be, something like this, where we get these big, big impulses, very parabolic type of rallies. But nonetheless, I don't think it's going to matter a whole lot because, we're almost at the end of the bear market, almost at the very end. Whether we consolidate sideways for a little while or, whether we end up creating something like this with the NASDAQ chart, I don't think it matters a whole lot. The big thing to understand is that we are at the very end of the bear market, and now that we're at the very end of the bear market, we know that historically this is where we've created some type of foundation before our next impulse, before the first impulses and the higher highs into our next bull trend. And so now that we're here, I don't think that we should be too worried. I don't think that we should be looking to panic sell. If you weren't selling up here, there's definitely no reason to be doing it down here. But anyways, guys, this is the video I had for you. Just wanted to summarize some of those thoughts, give you guys some examples that maybe you hadn't considered, maybe shed some light on perspectives that, I think are actually going to be plausible and playing out. For me, watching the NASDAQ and looking very similar to this, I believe that we're going to create a foundation over the next 6 months. Really 6 to 8 months we'll be building a foundation, and that's going to set the stage for our next major bull run and cycle top. So if you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also go ahead and join my VIP course, Signals. If you guys want to follow my trades, follow what I'm doing with my money, how I'm going to be restructuring my portfolio heading into this next bull market, you guys got to have access to my VIP. Links are in the description to go ahead and sign up on my website. Thank you guys so much for the support. And with that being said, I will catch you in the next one. As always, peace out.